Hello everyone, welcome back to my channel. So this video marks the end of the week number 22 in this road to 200k challenge. This has been a relatively quiet week because at this moment with Christmas in Christmas week usually trading has lower volumes, and so we start with quite a big uptick at the beginning of the week, but then most of the gains were offset, especially yesterday on Friday. Even though trading was weak, the major indexes came down by a significant margin. But even so, we were able to make a few trades, and yeah, let's see what those were. So basically, this is our current state in our portfolio. And if we look here at the trades we've done for this week, we can see that first of all, we started the week as I mentioned at the beginning at the previous video at the start of the week 22. We bought 500 more shares of Ford Motor Company, all right, because the price was basically again close to the support level that we mentioned previously, and so we just went and went ahead and bought some more shares. Now at this moment, and moving on from Monday, due to the fact that there were no more trades available for the following day on Tuesday, and because of the fact that of course trading was also very light, on Tuesday the 24th, the trading session was also shortened. There were no trades available, and so only on Thursday, on the 26th, we managed to do some trades, as you can see right here. Basically, we went ahead and took some advantage of the trading, of the uptick that the stock indexes had from late in the session on Tuesday to do some trades on Thursday. And as you can see, again, we sold more calls on QQQ as well with a strike price of 536, because as you saw here, this was the price of acquisition on which we had purchased our 3 contracts on the QQQ, but these expired worthless, as you can see right here. And yesterday, because indexes started coming down, and I felt that at the time, all right, the chances that it will reach any value close to 534, 536 is incredibly limited. And at the time, the 534 strike call had, if I'm not mistaken, a probability of market implied probability of expiring worthless, so ending up below the 534 around 92-93%. So because of that, we just went ahead and sold 3 contracts on this, which, because of course this is below our cost of acquisition, we would still have a profit because of the premiums we already collected on the contracts, but still this was done under the strong conviction that it would not reach this price, and it did not actually, because the index came down further down and ended up the day at 522. So probably we'll have to do something similar next week, because as you can see here in the option chain for the coming Monday, as you can see here, and assuming things will stay relatively where they are at the beginning of the session, the 536 call is basically worthless. It's 1 cent, so there is no value for us in selling this call. We will probably have to go for something like this one, for example, even though of course this is a super meager value, and the probability that the value will the option will expire worthless is at 97%. But still, we will have to settle for something like this, because we would just assume that it will not reach this value, and we still want to get some profit, some value out of these contracts. And assuming that the stock is where it is right now, because let's just see here in our calculator, so 534 divided by 522.43, which is the closing price of yesterday. So this strike price is 2.2% above the current price. And so in a day that in which there will be only light trading, it's expected to be light trading, such as, because we are very close to the New Year's Eve, I don't see the Nasdaq jumping anywhere, anything near, or nowhere near the 2.2% uptick, and so most likely we will have to settle for something like this to sell this call and see what happens. But this is something that we will decide later on Monday. As for the rest, and as you can see, we also have 37 calls which we sold here using our 4 motor company shares as a collateral. And why is that? Because even though the price went down of 4 motor company shares, the opportunity presented itself, and so the calls for next week, expiring next week, January the 3rd, 2025, were selling. Even though this is a meager premium, 3 cents per share, I felt that all right, the premiums will never be anything above this, unless the stock price comes very close to the price at which we want to outright sell the shares. As you know, we have currently average price of $10.31 for 4, and so my objective is to try to sell this at around 10.33, 10.34, 10.35, something like that. And so even though the price currently is 10.03, and so we are more or less 30 cents away from it. Given the distance between the current stock price and the price we wish to sell, and of course the strike price of these calls, 10.50, this was probably one of the best premiums that we could have at this point, unless the stock rises to the 10.10, 10.15, 10.20. And if it rises up to that level, we're not going to sell any calls, because if it reaches that level, probably it will continue to climb until we reach the 10.30, 10.35, something like that. And if it reaches that point, we just sell the entire holding outright, and we're not going to bother selling any calls on that. And so, given the large distance, the current large distance between the stock price and the price we wish to sell, we just went ahead and basically tried to do some money on this particular holding, and we will see what happens. Of course, it would be great if these calls were assigned. That means that we'll be able to sell at 10.50, and we still get a handsome capital gain on top of that. But I don't see that happening, and it's going to be over the course of a single week. Such a large increase, it's nigh on impossible for that to happen. So this trade is more than anything else to make some money out of these holdings, and of course while we wait until the stock rises. And basically this is it. We sold at 3 cents. We had to pay, as you can imagine, a very large commission here, as you see, because this was split into various entities that bought these options from us. And as you can see also here, the last line is the fact that the call that we sold on QQQ basically expired worthless, so this doesn't matter anymore. But for now we'll have to wait for next week to see how these trades pan out, but we are fine either way. If the call is expire worthless, all right, we keep the premium, so no problem. And if it gets assigned, it would be a dream scenario because we would be able to sell all the stocks, all the shares at 10.50, and so yeah, we would be glad to get that profit on top of everything we collected as premiums. And so this is it. We'll have to see next week how things pan out. I expect that trading will continue to be light because it's the New Year's Eve week. Obviously, as you know from the past, trading, even though it's light, stocks and index usually tend to go up slightly. But of course, given the fact that we don't know what's going to happen, yesterday stocks and indexes took a beating, so we never know what's going to happen. But for the time being, we are optimistic that at some point we'll be able to get rid of these 4 shares so that then we can start work on the Pfizer, but Pfizer has not been moving much, and it is at the price at which it's not really worth for us to buy the shares outright, because our current acquisition price is 28.50, and this is still not that far down, that acquisition price, so it's going to be difficult for us to increase our holding to try to lower our cost basis. Of course, we can also sell put on it and try to see if we can buy some shares at a lower price. But one thing that's been surprising to me is the fact that this particular holding has also been affected by a very, very shallow option chain, just like Ford does. But yeah, until we get rid of our 4 shares, we don't know what's going to happen or what we can do about this. We just have to wait and see what happens. Nonetheless, this is a good quality stock. I'm not that concerned about it. The stock is quite good, but nonetheless, it's consuming our cash, and we would be happy to get rid of it at some point. But for the time being, this is it. Let's just input our trades in our scoreboard and basically go from there. So this is it. This is our acquisition of the 500 shares, so there's nothing to be done here. Now let's see what the next trade was. So this is basically exchanging currencies. The next one took place on Thursday here. So here, let's do it this way. Right, this would expire on the same day as it did. This is the QQQ, right? And we sold a covered call on this. Again, strike price 536. We sold 3 contracts, and we received a premium out of this, which is this one. Yeah, basically we received 9 cents, as you can see right here. So 9 cents, and we paid the here, and we paid 1.05 in fees. Expired worthless, right? So we managed to get this profit out of it, which was, of course, it's almost insignificant given the size of this position in our portfolio. And again, we did the same thing yesterday, right? QQQ. Now this time we used a strike price of 534, 3 contracts, even though of course we have to keep in mind that this is basically the we have to change here, because this is the actual collateral, all right? And it would be nice if we can put here, we lock this cell so that we know that this is the actual collateral, and we sold this particular call options by 4 cents, and we basically paid 111 in premium, so 4 cents. In this case, as you can imagine, it's an even smaller return, so very low return. But again, yeah, this is the way it is. It's better than nothing. Now we also have to account for our call option here, with the call options that we sold on 4. It's going to expire on the 3/01/2025. Alright, so this is for motor company. This is a covered call. The strike is 10.50, and these were 37 contracts. Now this collateral is not correct. I'm just going to put here another color to make sure that we can then come back later and put the actual collateral correct. This is 3 cents, and now we have to pick up our calculator to make sure we get all the commissions right. So yes, this is it. Yeah, these are all the commissions. So this is 1.48 plus 506 plus 73 cents plus 69 plus 3.63 plus 0.7 plus 18, 3.48, 0.73, 5.65, and 145. So this was 26.51. Wow, this is a very large commission. Yeah, most of our premium got consumed by these by the commissions, but then again, it's better than nothing. So we'll have to wait and see what happens. Now this is it. We'll have to wait for this call to expire to see what we are going to do. In the meantime, I'm going to adjust this value off screen, right? And we are going also to assign this premium over the various holdings that we have here for motor company. So this is going to require some work also off screen that I'll have to do. In case you're wondering, all right, but if you have your activity statement, which is over here, which tells all your profits and losses and all that, why are we keeping this scoreboard? The reason is that in cases such as this one, as we have on 4, in which we bought a large amount of holdings and all that, it's easy for us to manipulate, not only to see, first of all, what is the average price, accounting not only for the prices that we pay for the shares, but also for the fees and commissions, and also allow us to simulate values. For example, if I buy 500 more shares at a price of 9.77, what's going to happen to the average price? You see, so it allows us to then see what's going to happen if we do a particular trade. So allow us to test our hypothesis. That's why it's important for us to keep this particular record or scoreboard. For the time being, and to close out this video, in terms of realized values, this is of course the activity statement from December 17, which was yesterday on Friday, right? As you can see, let's see what the value currently is. So this is currently our total gains for the year, 25,000 euros and 25,105 euros and 42 cents. So this is the value that we are aiming to reach 100,000. Of course, this is the year, we are at year end, so we probably will have to sum up the values to see when we going to get to 100k in realized returns. So for the time being, this is it. Feel free to like the video and subscribe to the channel. Your comments also are very much welcomed in the comment section below. I'm also available on LinkedIn in case you want to ask me any questions on this challenge and to develop any topics that you want to discuss. And I'll see you at the beginning of next week for the week 23 of this challenge. I'll see you there.